And good evening. We are doing it live right here, weeknights in the 5 o'clock hour in Los Angeles. Mottek On Money, 5 nights a week for you, live on the air here on 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, all your favorite podcast platforms. Now the latest on the Middle East crisis. Jerusalem and Tel Aviv come under fire as the sun set on the 10th day of war in the Middle East. Massive formation of Israeli troops reported to be gathering along the Israeli-Gaza border. President Biden warning Israel against occupying Gaza, and one of the most notable public calls for restraint by a U.S. president as the Israelis respond to this month's terror attack by Hamas. He told 60 Minutes over the weekend that, in his words, it would be a big mistake for Israel to occupy Gaza. Israel has been signaling it is preparing for a ground invasion of Gaza, even as the humanitarian crisis grows inside the coastal Palestinian enclave. The comments amount to one of the few times the U.S. president has called on Israel to use some sort of restraint in responding to the Hamas attack that left hundreds of Israelis dead. In response, Israel unleashed a massive bombing campaign against the northern Gaza Strip from which Hamas launched its attack. Officials say planning is underway, including on the ground in Israel, for a potential visit from President Biden. Biden has been vocal in his support for Israel since Hamas attacked on October 7th, killing hundreds of Israeli civilians, including children, and has promised to provide any support Israel needs. Meanwhile, the head of the Israeli intelligence service said today there was no time limit or limit of power on Israel regarding the punishment it will bring on to bear to Hamas for its invasion of the South on October 7th and the ensuring the end of the terror group. He says we are at war, not in another round of lower-scale conflict. In a round, you win with the perception of victory and achieving quiet. In a war, you conclude with a decisive win by altering the situation, in his words. Financial markets reacting today. We see the market closing sharply higher today as investors prepared for earnings season to move into full swing. And also, with an eye on what's happening in the Middle East, we see the Dow closing up 314 points today, the sixth day of gains in the past 7 trading sessions. For the Dow Jones Industrial Average, the S&P 500 moved up 46, and the NASDAQ Composite finished up 161 points. Stocks moved higher today. Also, gold gained as well. The U.S. dollar and treasuries all losing ground. We see the yield on the 10-year note pulling back a bit today. Meanwhile, oil prices also settled lower after having jumped on Friday to the highest seen since the Hamas attack on Israel earlier this month. More banks will be reporting tomorrow, with Bank of America, Goldman Sachs, BNY Mellon, all stepping up to the plate tomorrow. And some big tech names will also be reporting. Netflix and Tesla will be coming out with earnings on Wednesday. Another big story today, drugstore chain Rite Aid facing billions of dollars of debt related to opioid lawsuits filed for bankruptcy. Shares were halted on the New York Stock Exchange. Pfizer shares ended nearly 4% higher after executives outlined cost reductions first announced last week, and shares of Lululemon finishing higher by more than 10% after S&P Dow Jones Indices said the stock will join the S&P 500 starting Wednesday. Well, the hot labor summer spilling over into a hot labor autumn now, with the actors' strike continuing after talks broke down last week. And Ford's executive chairman, Bill Ford, today called on auto workers to come together to end a month-long strike by the UAW that he says could cost the company the ability to invest in the future. Another big show of support for Israel over the weekend in Los Angeles following the surprise Hamas terror attack on Israel 10 days ago on the 50th anniversary of the Yom Kippur War. Coming up, I'll discuss the war in the Middle East tonight with Rabbi Herzl Alulian, founder of the GEM Community Center in Beverly Hills. We'll also get an update on L.A. business issues tonight with Mark Wilbur, the president and CEO of Everything HR, founding member and former chairman of the Los Angeles Business Federation, L.A. BizFed, and former associate dean of the USC Marshall School of Business. But first, on your money, the markets, the economy, the impact of the war in Israel. Joining us now, money manager Ken Winans, president of Winans Investments, market historian, author of Investment Atlas 1 and 2, and former, and Forbes magazine contributor. We just saw his latest article last week. Ken Winans, thank you very much for taking the call here. Give us your assessment of things here as we start the new week.
Well, Frank, you were certainly right when you said it was a very busy weekend. I mean, for any of us who follow things geopolitically, which I think probably includes many of your listeners, there was a lot of I mean, it's quite amazing. You pick up things in social media, You pick up things in conventional media. You look and see what overseas is going on with futures and stuff. And I have to tell you, it reminded me a lot of the buildup into the U.S. invasion of Iraq in 2003. We came off 2.5 years of awful stock market activity, same kind of scenario. And yet, here we go. Just when the news was bad, here we go with a geopolitical mess. So you have that going on. Needless to say, besides tax deadline today, which I guess we just found out California just got itself another month because of what happened earlier this year. But I had to remind my clients that I had a lot of these same calls during the week after 9/11, certainly the buildup into Iraq, and certainly when we were dealing with ISIS. I mean, same kind of things. And there was a tendency I found then, and I'm finding it a bit now, for people to say, you know, it's different this time. Get me out of the market. And when people think like that, they're clearly not allowing history to be incorporated into their thinking. This is just panic. And the fact that the market went up today, while a lot of the foreign markets actually went down, tells you that people are moving money into the United States. And I'll talk more about that in a moment. But we're going to have this in the headlines for a good part of the rest of the year, Frank. We will. It's just no doubt in my mind on that.
What about the price of oil? Obviously, inflation's still a big concern, and we've seen the price of the gas pump here absolutely eye-popping in the last several weeks. Looks like we've eased a bit now, but certainly a lot of nervousness given the war in the Middle East and the potential here for this to expand. What's your assessment of where the price of oil goes from here?
Well, a couple of things are going to happen. I mean, number one, I do think we're going to go back to depending on more domestic sources of oil. We're going to continue to have that play out. Also, we have to remember the blue states, for lack of a better term, including California, where you have higher taxes and a higher cost of living, we're going to be more severely affected by geopolitical issues around natural resources than a lot of other states. I mean, all you have to do is cross the Nevada state line, and you find out very quickly how much cheaper gas is in other places. I mean, I think that this is a political decision many voters are going to have to make. You have an opportunity right now to make sure your state elected officials and the bureaucracy that supports them knows how you feel by how you vote. And just make sure that tax dollars are going toward fixing roads and not going off in other areas. But unfortunately, Frank, the whole situation with natural resources is going to play out for the remainder of the year. I think it will go up and it will go down. It's going to pogo a lot. But one of the things that was very interesting is looking at foreign markets today and how they have been reacting. There was a tendency this year. I'm going to jump ahead here a little bit. There was a tendency for a lot of wealth managers and other people in financial services to tell clients, well, you know, the U.S. market's not doing well. Let's diversify into foreign markets. Well, guess what? It didn't work out well. The dollar actually strengthened. I know many of us don't feel it, but the dollar's actually strengthened around the world. We're actually better off today than we were even 4 months ago. But one of the telltale signs that came out of this idea of global diversification into a whole bunch of different exchange-traded funds that are in different countries. Again, another example, it has not worked out well since the bear market started in 2022, going where we are right now. When I look at the 14 ETFs that I track that are global, the only two, and I mean the only two, that have done better than the United States in the last 20 months are, believe it or not, Brazil and Mexico. And I don't think anybody wanted to jump into those two places earlier this year. So, again, I caution the listeners, be careful about dumping your good old-fashioned U.S. holdings and finding that there's something better abroad, because you're not going to find it in this kind of inflationary environment, which is sadly a playback of the 1970s all over again.
Interesting to note that Bitcoin got a bounce today, jumping on a false report that said the SEC approved BlackRock spot Bitcoin ETF. I don't think you have the laser eyes on here, Ken, but we do follow what's happening with the cryptos here. What's your reaction to what happened today under these unusual circumstances, this bounce in Bitcoin, and your thoughts about the cryptos here?
You know, the thing about the cryptos, I would just caution everybody, I know there's a tendency to think of this as an alternative currency. It has not turned out to be that way. When I ran my analysis on cryptos, and I admittedly mainly Bitcoin, I find that the relationship to what's going on in the NASDAQ is far more prevalent than what's going on in currencies around the world when it comes to crypto. So the fact that the NASDAQ had a good day and crypto had a good day, and as you said, there are some rumors coming out about what's going on with it, I would just caution everybody, there's still a lot of foundation we have to lay with crypto. There's still the backlash or the bad news on the trial going on right now and all that's happening there. So, again, I would caution everybody to be, if you want to be in commodities, which I totally agree with, that's fine. And crypto certainly is one of a basket of currencies, that's fine, including gold. But if you're going to be a one-trick pony and try to trade this thing in this environment,
Get an inside look at Hollywood with Michael Rosenbaum, talking with the Phelps brothers.
My gym I go to here is owned by a load of Polish guys. I don't really fit in, a bit leaner, shall we say. And this guy waddles over to me one day and he said, I was back in Poland visiting my family and my niece said, you're going to have to see this program. All of a sudden I see you and he's at my gym. My niece wouldn't believe me, so I had to have a photo with this guy, his name is literally Tank as well.
Inside of You with Michael Rosenbaum, wherever you listen.
Old Latin phrase, caveat emptor, let the buyer beware.
On there live with money manager Ken Winans. At this point, Ken, given this nervous time here at the moment, any specific places where you are putting money now and or taking it off the table?
Well, Frank, the one thing, and we all have our philosophies on how and what we want to do in these situations. I tend, I'm a motorcycle rider, so one of the things I've learned is that when there's trouble ahead, you have to, it's counterintuitive, but you accelerate and don't hit the brakes. And I think when you've got this going on, it's not a bad time to put money to work and accelerate your investment into this market right now. I know it's maybe can be a bit scary. I know it makes people nervous to do it, and I'm not saying do it full-heartedly, but it is a time to look for things to buy. So the number one thing, inflation is going to be with us for at least the next year, possibly 2 years. Look at some inflation-resistant industries, and most notably, as the earnings come out over the next 2 weeks, look and find those companies that have managed to make it work in this very tough environment. You want to buy those. I would just say, you talked about Rite Aid and the problems that had bestowed that old company. They started as a previous pharmacy company that was over 100 years old. These old companies, unfortunately, many of them don't survive. But with that being said, the point is, you want to look for companies that are the reverse of that, and now don't buy cheap things. Buy things that are thoroughbreds. So I'm going to step into any company that I'm tracking that is hitting its numbers, moving ahead, because I think we're going to get that seasonal bounce in November, December, and January, even if the rest of the market doesn't do well. So the key areas to look for, inflation-resistant industries, insurance would definitely be one of them. Healthcare, another. These are two areas we know that costs can be passed on to the consumer or the patient. We hate hearing those terms, but they can. The other area has been kind of interesting. It's been mulled all year because it's traditional in an inflationary scenario. If you are a value-type investor and you like dividends, the number one area that I see that's sticking out right now are utilities. Now, again, I'm not talking about necessarily California utilities, because they typically are political punching bags. But you can find a lot of utilities in other parts of the country in, purple to red states where they have a fair shake. And you can find some reasonably good dividends paying north of 5% if you're a dividend player. My point is simply this. Put your list together, work with your advisors, come up with a game plan, and I would step into this crisis, look for deals with the earnings. And if you have cash sitting on the sideline after Halloween, you need to think about why you have that when there are some things out there you could buy.
On the air live with money manager Ken Winans, and let's talk about drugstore chain Rite Aid, that big drugstore chain filing for bankruptcy over the weekend. This added to the already long list of companies filing for bankruptcy this year. Ken, as you well know, in fact, the number of American companies that went insolvent this year had piled up now to 516, according to S&P Global, and that's much higher than the 263 bankruptcy filings we saw the first 9 months of last year and 321 filings in the same period in 2021. and the number was just shy of the 518 bankruptcy filings in the first 9 months of 2020, when, of course, the whole economy was shut down. So besides 2020, this year's bankruptcy toll has been the worst seen since 2010. What does that tell us about the economy at this point?
Frank, I call it a performance mirage, because I have a lot of people saying, well, look at the S&P 500. It's up 9% on the year. That's one index. I can show you 6 or 7 other key indices that are at best break even for the year. I warn people, be careful about letting something like that determine some fanciful fairy tale you have about where things are. This is a very tough environment right now. And as I go back and look at my career, there's only been a handful of times where I've had multi-year situations like this where clients and just generally investors, and their patience has ran out. They've been used to these bounce backs, and to get into another bull market, we're not going to have it this time. We need to be smarter about how we approach. You talked about my previous Forbes article I wrote last week. I would encourage everybody to go back and read that. A bull market is not going to make up for your lack of discipline if you're in fact in that camp. So Frank, as we would say, and I know the Dodger fans don't want to hear this, it's hardball right now. We're playing hardball baseball, and this is a tough environment, and you have got to buckle down and get smart about budgeting, how you invest money. Don't be afraid to look for opportunities, and realize that we're going to finish out the rest of this year probably. I probably feel like a lot of your audience. I can't wait to get out of this year for a lot of different reasons. But it's not a surprise that we're having those kind of bankruptcies, and it's the same thing over and over again. It's debt, and the fact that this debt is going to be refinanced at much higher levels going forward, that's going to cause a lot of weak companies trouble, and I dare say it's going to cause a lot of weaker municipalities trouble across the country.
And here we are on October 16th. This was to have been the tax deadline, as you mentioned, but now most residents living here in California will get another extension on their tax deadline. It's interesting that the IRS made the announcement on the tax deadline day, which was today, but now November 16th is now the new tax deadline for most California taxpayers because of the disasters we've had this year. As a result, most individuals and businesses in California will now have until November 16th to file their 2022 returns and pay any tax due. Have we ever seen a situation like this where we've seen such a tremendous delay in the tax deadline and then another extension on the actual deadline?
Not in California, at least not in recent history, but I do know that after Katrina hit, certainly Louisiana and other parts of that region, they had multiple tax deferrals just as people were trying to get themselves up and moving around. But, Frank, here's a canary in the coal mine. Of all the articles I read this week, and I'm still one of those people, I still enjoy going through a newspaper in addition to electronic. And the one article that caught my eye, it said that $700 billion is owed to the IRS from citizens of the United States that have either can't pay it, have deferred not to pay it, and pay interest. But I think that here's the point I'm bringing up, is that I have a feeling that probably California told the federal government, and I think the Franchise Tax Board was feeling the pinch too, which is the state tax authority in California. Hey, people don't have the money. You want to throw them in jail, good luck with that one, but they just don't have the money right now. We'd be better giving them more time to figure out how to do it. I probably way overstepped my bounds, and I apologize, but that's what I'm reading into this. People are feeling the pinch that they can't even come up with money for their tax bills, and I think it's going to be a common theme as we go into 2024. The cost of living is really hitting people hard, and it's just going to continue to be a theme.
I think you made an excellent, painful point there, Ken. Thank you very much for that thorough assessment of what's happening here. That is money manager Ken Winans, president of Winans Investments, market historian, author of Investment Atlas 1 and 2, and Forbes magazine contributor. Check out his latest contribution at Forbes. Ken, thank you very much for taking the call here this evening.
My pleasure, Frank. Take care.
Thanks again very much. Friends, if you're hurt in an accident, you need an experienced advocate. And Clark Fielding and his team of sharks at Fielding Law are on standby, ready to dive into your case. My friend Clark the Shark is fearless for justice and your go-to attorney when injured in an accident that wasn't your fault. Whether it's a car accident, slip, trip, fall, or any kind of personal injury, Fielding Law is here to make sure you get the care, attention, and compensation you deserve. Fielding Law can assess the circumstances of the case, negotiate tenaciously with insurance companies, and if necessary, file a lawsuit and litigate to seek fair compensation on behalf of you, the injured party. An injury is a major disruption in your life. Medical expenses, lost wages, pain and suffering, property damage, and other losses incurred as a result of the injury are all part of the damages. Don't try and handle the process alone. You need an expert in the process, and the team at Fielding Law are the ones to trust. Put Clark Fielding's number in your phone under the word accident. That number is 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. 790 KBC welcomes Daryl Hall with special guest. Want to take a guest? A guess? Todd Rundgren coming to the Pantages Theater November 6th. Hello, Todd. Tickets are on sale now at Ticketmaster.com. Right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you're caller 9. Call now, 1-888-790-5222. Mottek On Money continues here in 790 KBC. A winning day for the stock market. The Dow closing up 314 points. That wall of worry continues to be climbed here. We're at 33,985, the sixth day of gains in the past 7 trading sessions for the Dow Jones Industrial Average. The S&P 500 ended up by 46 points at 4,374, and the NASDAQ moved higher by 161 at 13,568. In the cryptos, we see a Bitcoin up about $100 now at 28,450, Ethereum up 12 at 1599, and Doge at 6 cents. The yield in the 10-year note now at 4.71%. Rite Aid filing for bankruptcy over the weekend, facing billions of dollars of debt related to opioid lawsuits. The Rite Aid drugstore chain did file for bankruptcy on Sunday, and shares were halted on the New York Stock Exchange. Pfizer stock moving up nearly 4%. It looks like the company has outlined cost reductions that were first announced on Friday. Taking a look at the price of oil, it has actually pulled back a bit today. Right now, gas prices, have moved down by just 1 cent in the last 24 hours. Here in the Los Angeles area, we're looking at $5.78, the average price for regular, $6.14 now, the average price for premium, and diesel now averaging $6.35 a gallon in the LA Long Beach area, according to today's AAA fuel gauge survey. We see the price of oil settling lower after having jumped on Friday to the highest seen since the Hamas attack on Israel earlier this month. Crude oil futures down $1.03 today to $86.66 a barrel. Mottek On Money continues here in 790 KBC. Now the latest on the Middle East crisis. Repeating the top story now, President Biden will travel to Israel on Wednesday to show support for the United States ally as concerns increase that the raging Israel-Hamas war could expand into a larger regional conflict. Secretary of State Anthony Blinken announcing the president's travel to Israel as the humanitarian situation in the Gaza Strip grows more dire and as Israel prepares for a possible ground attack on the territory to root out Hamas militants responsible for what U.S. and Israeli authorities say was the most lethal assault against Jews since the Holocaust. President Biden looking to send the strongest message yet that the U.S. is behind Israel. His administration has pledged military support, sending U.S. aircraft carriers and aid to the region. Authorities have said they would ask Congress for upwards of $2 billion in additional aid for both Israel and Ukraine, which is fighting Russia's invasion. The Secretary of State.
Former Navy SEAL Mike Ritland keeps it real on the Mike Drop podcast.
He's the co-CEO of the All Secure Foundation, which assists special operations and active duty combat vets. Tom Satterley.
Nobody helped you shoot your gun. They trained you how to shoot your weapon. So we're going to train you on the things you've never been trained for, how to come home from war. Everything else that turns people away from it, we try to rebrand it.
Reduce or dismiss the kind of stigma that's associated with it.
You have to.
Mike Drop, raw, unfiltered, intellectually sound, wherever you listen.
Blinken making the announcement today after more than 7 hours of talks with Israeli Prime Minister Benjamin Netanyahu and other top Israeli officials. Again, repeating this news tonight that President Biden will be traveling to Israel on Wednesday to show support for the U.S. ally as concerns increase that the raging Israeli-Hamas war could expand into a larger regional conflict. That war, by the way, has a more than 50% chance of drawing in militant groups from Lebanon or Syria or producing a direct conflict with Iran, creating more oil disruptions than financial markets currently think. That's the view of Matt Gertgen, a chief political strategist for a Montreal-based RCA research company. He sees a 70% chance of the conflict expanding beyond Gaza in the next 12 months. MarketWatch reports strategists are contemplating the potential ramifications of the conflict on the financial markets, even as investors appeared to be relatively calm for the moment. Traders shaking off concerns about the Middle East, with all three of the major stock market averages closing higher today. In fact, we've seen the Dow moving higher for really the past week since the Hamas attack on Israel. The 30-year Treasury yields also finishing higher as investors sold off government debt and abandoned the flight to safety trades we've seen over the past week. Oil futures, meanwhile, did settle lower, as I noted earlier, following a sharp gain on Friday, with West Texas Intermediate crude oil falling more than 1% to 86 and change on the New York Mercantile Exchange. Now, some traders and investors are worried about the possibility of a second wave of U.S. inflation that has not been fully priced by the financial markets yet, which comes at a time when the Fed is expected to take no action at its upcoming meeting October 31st through November 1st. The announcement will be coming right after the meeting there on November 1st, with central bankers uncertain about the economic outlook. Of frozen, uncertain Fed risks higher inflation and higher market rates as a result, according to Chief Economist Chris Lowe of FHN Financial out of New York. In addition, we are hearing a 25% likelihood now to the scenario that Israel will attack Iran, according to the group that makes its predictions on what could happen here, with Gertkin assigning a 25% likelihood of the scenario that Israel will attack Iran, its assets across the region, or its core sphere of influence, Iraq, a scenario that could force Iran to respond militarily, which would include disrupting oil supply to tell the U.S. to restrain Israel. Growing instability in the Middle East now posing a 31% chance of major oil shocks, and investors should prepare to make such shocks their base case over the next 12 to 24 months, according to the folks there at BCA Research. Gertkin recommends that investors go long defense stocks and energy versus cyclicals at this point. Brent crude oil prices have not risen materially, but a significant escalation in tensions would likely apply further upward pressure, according to another assessment. While policymakers will likely look through those developments in the near term, higher oil prices can work their way into core inflation, and inflation expectations, if sustained, demanding central bank actions, as we've heard from many of our analysts here. If oil prices do move up further and price pressures do reemerge, expectations of additional Fed action from policymakers could threaten a renewed bond rout. In light of the situation in Israel, it's prudent for investors to maintain a diversified portfolio across different asset classes, with a particular emphasis on high quality and defensives, as we've heard from our top analysts over the past week. Mottek On Money continues here in 790 KBC. Let's get an update now. Let's get right down to business here on LA Business Issues tonight with Mark Wilbur, President and CEO of Everything HR, founding member and former chairman of the Los Angeles Business Federation, LA BizFed, and former associate dean of the USC Marshall School of Business. Mark Wilbur, thank you very much for taking the call. Now, a second war breaking out, of course, weighing heavily on everyone's mind here. Give us your assessment of things here at the moment.
Thanks for having me on, Frank. It's always great to be on. Well, obviously some major concerns. I know the gas prices dipped down a penny today, but I think that's because Iran has not jumped in. If Iran jumps in, or any other parts of the Middle East jump in, you're going to see upheaval that we haven't seen in quite a while that hit the oil market. Which, of course, every time that happens, and you and I have talked about this, where oil is connected to more than just gasoline that goes into your car. It's connected into manufacturing. It's connected into healthcare products. It's connected all through our economy, all the way down to the plastic bags you grab at the grocery store. So it's going to have a pretty significant impact if that happens. And I'm really concerned about it because a lot of people are giving odds at being, well over 50% that somehow this is going to get drawn in.
Certainly inflation running hot, and those eye-popping gas prices coming down painfully slowly here in the Los Angeles area. As we've seen in the past, gas prices go up like a rocket when oil goes up and come down like a feather when oil comes down. And right now, oil is still stubbornly high, close to $90 a barrel. So it's certainly a very nervous time for consumers. We've seen a hit on consumer confidence. And I don't know if you heard Ken Winan's assessment a few moments ago. Today we found out that the IRS is extending the tax deadline from today to November 16th, another extension. Ken made the observation that perhaps people here in California are just completely drained, and those in California may have been signaled to Washington as well as Sacramento that people just don't have the extra money here at the moment. What's the buzz that you're hearing about how people are doing these days?
I love when Ken's on because he's, spot on as usual. But I loved his take on the fact that maybe this is also related to the fact that people don't have the money to be able to, pay the tax bill here in October. And I don't think it's going to get much better in November, to be honest. I think the situation is pretty significant right now. A lot of people are pretty strapped. There's not a lot of wiggle room here. If people hadn't been socking away some liquidity, they're probably really frustrated right now across the economy. I do think he is absolutely correct, though, that the detrimental impact right now on our government is significant because they've got bills to pay too as part of the process. So it's all connected at the end of the day, and the economy. And if they can't get the tax bills paid, that's going to have some cuts come into government significantly.
Certainly, and consumers are under pressure with the highest credit card rates on record as the Fed now contemplates another rate hike pretty soon here. So we're all watching out for that. And in the meantime, something that you're always focused on, the job situation. We got that report today that mass layoffs are on the rise here in the U.S., according to a new report out this morning. What is your assessment of the job situation here at the moment?
A lot of companies are actually trying to stay under the radar screen on that. But yes, that's actually true. There's a lot of layoffs still going on, a lot of concern about things. This is why the whole strike thing with SAG-AFTRA and the hotels and so on. I thought the writers were really smart in trying to get a deal done and get it put to bed because, things aren't getting better. There's articles today about Disney trying to raise prices to meet their revenue goals. In the middle of a 100-year anniversary, normally that would draw people in. I think there's some really significant issues going on there, Frank, and I'm really concerned about these layoffs. And even LinkedIn today. I mean, LinkedIn is probably, one of the most important business social media things that are out there for people. And even they laid off 700 people today, which really surprised me, really caught my eye because that is not one I expected to see.
Rite Aid filing for bankruptcy. That Wall Street Journal report, it turned out to be true from about a month or so ago. So that's certainly big news too.
Yeah, the Rite Aid. I was wondering why more of the pharmacies hadn't been pushed into filing for bankruptcy. So one of the big ones did. I think Rite Aid has always been a bit of the stepchild in the process. Compared to CVS and Walgreens, which are just behemoths. So it doesn't surprise me with the opioid debt, impact that they're getting hit with, and rightfully so for what, went on in those situations. But yeah, I mean, these are consequences. I walked into the Rite Aid the other day and I noticed that the shelves were not completely full. Like they're probably holding up on inventory.
Certainly. And of course, Rite Aid and other drugstore chains have been hit heavily, certainly in California, by crime. And that's got to be a factor, too, with some Rite Aids actually having closed because of incidents of crime. For example, the Rite Aid on Wilshire Boulevard and the Miracle Mile shut down some time ago.
Yeah, I think it's stunning, Frank, how many businesses, not just in the pharmacies, but look at Nordstrom's and some of the other, really marquee retail companies that have closed stores, Target, Walmart, and Starbucks. I mean, these are companies that nobody would ever expect them to be closing a store unless they were moving it down the street. And here's a situation where, you've got Rite Aid, all this crime going on, and none of our politicians are really addressing it head on. They sort of just keep expecting it to magically improve, but their policies are never going to get there the way they are being dictated today. Where you're cutting back on police forces, all these kinds of situations is only feeding into these group smash and grabs and where you're not even putting people in jail with the cash bail system now. It is all feeding into just more and more and more crime. It's really frustrating as a citizen. My family goes back to the 1800s here, Frank, and it's super frustrating to watch our state in complete meltdown, and none of our politicians are capable of fixing it.
Very heartbreaking about what's going on at the moment. And among the movers and shakers you talk to in the business world at the highest levels, what is the mood at this point in the face of this shoplifting epidemic and everything else that's going on out there?
Surprisingly, I think actually even more than the crime, I think the biggest concern is the economy. We keep giving money away. We've been sending billions off to the Ukraine. Now we're going to be sending billions into the Middle East. We've been sending billions to, people illegally coming across the border without any plan. There's not a plan. We just hand out money. And so it's all these things wrapped up start impacting the economy significantly. And we continue to erode our financial position as a country. And eventually that's going to roll up on itself. I mean, this next generation is inheriting a level of government debt that is, I didn't even know that it could reach this high. It's kind of stunning. This is one of those discussions, and I'm sure Ken Winans would agree with me that, ultimately this bleeds into the marketplace and ultimately will lead to some real significant adjustments to our economy that I don't think are going to make people very happy.
All right. If hackers ever got into the Federal Reserve system, they would get away with what, about negative $33 trillion at this point?
Yeah. I mean,
Stunning.
You can run a lot of lotteries, Frank, but I don't think enough of them to pay that off.
Yeah. Now, here's one bright spot before we let you off the hook. Gladstone's restaurant to close after 50 years now, reopening. They originally were going to close for a new Wolfgang Puck restaurant, but now we got the bulletin here today. The Gladstone's restaurant on PCH will be staying open under new management.
How awesome is that? That's just one of those iconic things that puts a smile on your face as a Los Angelino. I mean, everybody who'd have somebody come visit from wherever in the country, it's one of those places you always take somebody. So I'm really happy to see that.
Absolutely. Gladstone's the iconic restaurant there on PCH. We understand will be staying open under new management, according to various reports today.
Yeah.
And this was set to close and now is reopened under new management. Gladstone's confirming the good news to the public, which quickly showed support and excitement over the announcement, including Mark Wilbur here live with us here this evening.
Yeah, absolutely, Frank. I mean, I'm just so happy because I love Gladstone. I like sitting out over the Pacific Ocean. Who doesn't? You can see the best sunsets in the world out there.
Absolutely. Well, Mark, thank you very much for coming to the line and leaving us with that ray of sunshine. And always enjoy our conversations here. And thank you very much for always stepping up to the plate on the tough issues that we're all facing here. Mark Wilbur, President and CEO of Everything HR, founding member and former chairman of the LA BizFed, Los Angeles Business Federation, and former associate dean of the USC Marshall School of Business. Live with us here tonight on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz. Royal Oaks coming your way next here on 790 KBC.
You loved Lala Kent on Vanderpump Rules. Now get to know her on Give Them Lala.
I used to be so down with dudes giving me pet names right off the bat. The second a dude, I first meet him and he calls me baby, I'm like, and we're done here. Goodbye.
Really?
Yeah, don't call me babe, baby, boo, bye.
Interesting. That's
but
a big
I
red
can
flag.
call them boo because I call everybody boo.
What if that's their excuse?
Yeah.
That's funny.
No, you don't. You're a man. You move different than me.
Watch what Lala is talking about on YouTube or search for Give Them Lala wherever you listen.